What's going on, guys? Welcome back to another video. In this video, I've got another really important AMC and overall broad market update to bring all of you this afternoon. So first of all, happy Father's Day to everybody. Hopefully everybody's having a great extended long weekend. But here are some of the things that we're going to be covering in this update. We're going to do a little bit of technical analysis on AMC. We're going to hit the Ortex data, a little bit of the options and Max Payne going into next week. But we're going to go over some things that you guys have to understand about the current state of what we are seeing right now in the broad market. We are seeing the overall market selling off very, very, very significantly. You guys have obviously seen what's been happening with crypto over the weekend. Bitcoin has fallen below 20K, and there are some really, really interesting things that we need to talk about right now with overall derivatives exposure, overall leverage ratios, and just how bad this situation could potentially get and what we need to focus on going forward. You guys are going to see some of the data that we're going to be showing you guys in this video, and honestly, when I first took a look at it, it blew my mind too. So before we get into all of that information, if you enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, we've been cooking up some pretty special stuff for you guys coming up over the next couple of months with 1348. So if you guys do want to get grandfathered in, make sure you check out that link down below. We got over 55 private live streams every single month, real-time options data with flow and unusual activity coming soon, trading algorithms, alerts, you guys know the deal. Check out that link down below if you guys are interested. So taking a look at AMC right here on the 4-hour time frame, which is typically what we like to look for to kind of signal a little bit of a breakout. Well, we are kind of consolidating down here in this range. We're kind of trapped in a little range here. We really need to see us break above this 200 EMA. We've seen a couple of attempts at this 1348 cross here, but we really need to see some momentum above this 200 EMA. And honestly, I would like to see it break above this previous high that we made over here to really signify that we are on some bullish trajectory. But again, when you look at it on a little bit of a longer time frame, AMC is most likely going to be moving with the overall market. So even though this could be hard at the current time, we are going to need to see the market start to bounce back up in order to give us that initial push to send us back to the upside. Now, coming over and taking a look at the Ortex data, 22.69% estimated short interest. So obviously, guys, the shorts are still here. If you guys watched yesterday's video, overall in the broad market, short interest and the amount of shorting that is going on is the highest it's been in the last 10 years and the second highest that it's been since 2008. So there's a lot of short interest going on right now and shorting in this market right now. We also have 19.18% average cost to borrow, 21.07% max cost to borrow, and it's very possible that we end up next week, depending on what the market does, going above 200 million shares on loan. On Monday, we should see a little bit of a decrease due to these returned shares over here, but again, it's not really a sign of widespread short covering. Now, when we come over here, again, when we're taking a look at the options chain on Stonko Tracker, July is going to be a pretty important options date. Any of these weekly expiration dates, I'm not really all that excited about. Again, we could see moves back to the upside, but in terms of the potential for a big move based on the options, July, the monthly, is going to be pretty big there. We've already got 87,000 contracts in the money here with on the put side, which need to get unhedged for when they run out of the money. And then on the call side, we only have 10,000 contracts in the money. So there is a lot of potential if we start running up to see the majority of these 401,000 call contracts start to come back in the money. Now, again, Max Payne going into next week, $12. In my opinion, I don't really pay too much attention to what the Max Payne price is. We typically don't finish right at Max Payne on any given week. It's pretty close, but again, last week it was 15, and we didn't necessarily get close to that. Now, let's get into some of the really, really important things that we need to go over in this update. So what I want to first bring you guys over to is this chart right here. This is going to give us the global OTC derivatives notional amount outstanding by risk category. What this means, this OTC derivatives portion, is either going to be bank to bank or institution, like a hedge fund, to a bank in what they're doing in these over-the-counter derivatives. The way that I would like you guys to think about OTC over-the-counter derivatives is if you guys have seen The Big Short, there's a scene where Christian Bale's character, Michael Burry, goes to Goldman Sachs and they have a one-on-one conversation on how to build this new product, these credit default swaps, in the housing market. That's what I would like you guys to kind of think of this as. They're not going directly to an exchange to purchase these contracts. They're going right to a banking institution. Now, what we see here is we saw this total amount of 710 trillion US dollars of exposure peak in around 2014. Then it started to come down, and we've been in this channel up ever since. Currently, right now, we're sitting at $598 trillion of total exposure globally. That is insane. Warren Buffett's come out many times in the past and said that derivatives could be the ticking time bomb to the next great financial crisis or collapse. There's a very key difference, though, about what is happening right now in the financial markets with what was happening back in 2008. In 2008, there was no crypto market. It did not exist. So what we're looking at here is a wildly different situation with a wide variety of different types of risk exposure. Now, I just took a peek. In 2008 was when the Bitcoin, I believe, domain was registered. And in 2009 was when the first transaction actually took place. So it was right around that time, 2008, 2009, when the crypto market started to form. But again, leading up into 2007, 2008, and 2009 is when we started to see a lot of the reasons why we saw 2007, 2008, 2009 happen really start to form. Now, with this new situation going on in crypto, remember, you can take out wildly leveraged positions in crypto, which we are going to take a look at in a second. But right here, the key number I want you guys to focus in on is this $598 trillion globally. Now, let's take a look at what it is in the United States right now. So the top 25 commercial bank savings associations in trust companies in derivatives. We've taken a look at this a couple of times. Remember, Goldman Sachs has a wildly high leverage ratio right now. And when we come down a little bit further, $176 trillion of exposure is out there in the overall market on total derivatives right now. So again, these charts are in millions of dollars. When you do a million times 100 million, you get to a trillion. So a lot of these numbers right here, guys, are pointing to some wildly high risk exposure numbers across the overall market. Now, taking this a little bit further, we've looked at these numbers again, but I want to bring these back up. These numbers right here, FINRA margin debt versus the S&P 500. This is an inverted chart right here. So the red line is going to be the margin debt, and we can see here, on the left, on this y-axis, we're seeing these numbers go vertically down. So when we see this red line start to come up, it means that the margin debt is coming down. What this would suggest to us is either a massive period of deleveraging or forced liquidations out of positions where institutions can't meet margin calls. Now, I personally would think that that's the most likely outcome here with what's going on with this giant spike or decrease in the actual margin debt that we are seeing, just based on the amount of giant hedge funds. We've seen Tiger, we've seen Melvin, and we've seen a lot of other different funds too facing very similar issues where they get margin called. They can no longer meet these margin calls, and then they end up getting liquidated out of their positions and then potentially closing down their fund. Now, this number that we see right here doesn't actually come in and account for May numbers. When we come over and take a look at this FINRA website right here, we can see that ever since January, 829, 835, 799, 772, this most recent number right here, 752,000 in millions over here. So we are continually seeing this number decrease and come down with what is going on in the overall market. Now, I want to bring this over to crypto a little bit for you guys, because we've seen a lot of times in the past where people get over leveraged in the equity market, they get margin called, you see massive fire sales, and then you start to see the overall market coming down. But I think after the research that we have all done over the past year and a half, we know that the crypto market and the equity markets are pretty tightly linked right now, just based on the amount of algorithmic trading that is going on. So when we come over and take a look at this chart right here, this is going to be the estimated leverage ratios that we are seeing right now, just solely on Bitcoin. This is not the total crypto market. This is just on Bitcoin. But what we're seeing here is that the leverage ratio recently hit an all-time high, just starting to come down a little bit here. But overall, if you're looking at this trend, it doesn't really show any signs of slowing down right now, even with this significant drop in Bitcoin. Now, we could end up seeing some leverage short positions coming in here. It's very, very, very possible. But at the end of the day, what this is telling us is that the amount of levered bets in the crypto market right here is still very, very, very close to all-time highs. Now, what this leads to is more crazy volatility in the overall market. Now, with what we're seeing with the Fed raising interest rates, we are seeing these inflationary pressures still persisting in the market. We are seeing a lot of essentially bearish or hawkish things really affecting our overall equity markets. So what do we do about this? Well, we are all pretty much at this point still holding our AMC and GME positions. That's kind of a given at this point, but there are some things that you guys can do to protect yourselves in these types of market conditions, because people are putting out projections right now on basically how long this bearish cycle is going to last. It could last for a period of time of years, or this could be over by the end of this year or the first half of next year. Nobody really knows at the current time, but there are things that you can do to protect yourselves. First, it's very possible that you guys are kind of in the position right now where you may not have as much cash in your accounts. What you can do is kind of recapitalize some of your positions and maybe put some inverse ETFs into your portfolios. You could put some SQQQ, you could buy some VIX, you could do some things like that as well. But if you have a more short-term mindset, well, we've been teaching this for the last 6 months, 1348. You guys could easily be making money in this market right now just by learning the strategies that we are teaching, coming along and following our algorithms that we are releasing to you guys. And we do have something pretty interesting coming out with one of our algorithms too that actually looks very, very, very good. And I am super excited to talk with you guys about that. But that should be out in a couple of weeks. But guys, there are things that you can do. But again, the other thing that I want you guys to think about right here is a quote that I heard over the last week. Everybody has a long-term perspective until they start witnessing short-term losses. The market at its core is a long game. I think a lot of people have gotten spoiled over the last 2 years, seeing these giant gains in their account in a very, very short period of time. And they think that that is the norm. If you've been around this market for a long enough period of time, or if you've studied market movements, you know that the period that we've been in has been a period in the market that nobody has ever really seen. So when we start to see some of these things start to come back to normal and kind of read what the Fed is doing and kind of seeing where things are going to head with inflation and where the market ends up going, then that could be a really, really good time to start buying dips. But again, we are thinking long-term here with some of these things. So that is going to wrap up this update on AMC, this crazy situation that we have going on in the overall market. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great weekend, and I'll see you guys in the next video.